Guys, welcome back to my channel. Okay, this is me here, SP Trade. Welcome back to my channel. Welcome back to today's video analysis. Today we are going to do top-down analysis on EURUSD. EURUSD. We are going to do top-down analysis on EURUSD. So sorry guys, I'm going to be using my phone. My phone right here, right. I'm going to be using my phone. So let's dive into our video. Let's see what the market has for us. Top-down analysis on EURUSD. So as you can see, this is EURUSD on the weekly time frame. On the weekly time frame, what can we see on the weekly time frame? I'm going to start my analysis from this top. That side. So inside this box, I'm going to be analyzing those charts inside this box. Okay, inside this box, what can we see? I'm going to be using SMC strategy. I'm going to be using SMC strategy. Structure. I'm going to be using structure, liquidity, and point of interest. So from here, what can we see? We have a break of structure, and the market is reacting to one point of interest at that area. Don't forget that this is weekly time frame, and also we have a break of structure to the downside. And don't forget that we have something we call breaker block at this area, which the market is reacting to. Okay, here also we have a break of structure. Now this is our next point of interest on the weekly time frame. That is our next point of interest. Let me delete. Okay, this is our next point of interest. For your point of interest to be valid, you need something we call imbalance or FVG, fair value gap. For your other block or any point of interest that you may be using to be valid, you need something we call FVG or imbalance in the market. So now, as you can see, this point of interest is giving us, first thing, we are having inducement. Inducement is one of the let me say it's one of the liquidity that people used to use in the market. So inducement is the first pullback which the market makes. So before we move it to the downside, the first pullback. So that is our inducement at that area. There is inducement. So first thing, we have our inducement, we have our fair value gap, and we have a clean order block on the weekly time frame. Don't forget that we are doing top-down analysis. This is the weekly time frame. Now, what can we see on the weekly time frame? The weekly time frame is telling us that EURUSD is in what? It's in downtrend. It's a downtrend on the weekly time frame. It's a downtrend. So in this downtrend, how can we find opportunity? How can we see an opportunity in this downtrend before market is going to get to our interest area, or let me say, yeah, our interest area for us to take trade? The thing is that we are going to analyze the internal. We have something we call external and internal structure. So this is our internal structure. the Euro USD internal structure. Now we want to analyze the Euro USD internal structure. Don't forget that Euro USD on the weekly time frame is downtrend. Now we want to analyze the internal structure, because once we have a pullback, once we have a expansion, there must be a retracement. Once there is expansion in the markets, what I mean by expansion is that once there is something like this is expansion, higher high, higher low, higher high, higher low. This is expansion and this is retracement. Once you have an expansion, you must have a retracement. There must be a retracement in the markets. So this is what we call expansion. This is expansion at this area, and this is retracement at the lower side. So this is expansion, retracement. Also in the downtrend, lower low, lower high, lower low, lower high, lower low, lower high. We have retracement, expansion, retracement, expansion, and so on and so forth. So that is it. That is it. Once we have a expansion, sorry guys, once we have a expansion, this is expansion from here. There must be a retracement. The market must come back to this area to sell back. That is on weekly time frame. Don't forget that that is on weekly time frame. Okay. So, and what I like to use to do sometimes is that you see this our swing low. Let me say our liquidity low at this area. This our sell side liquidity. I'm going to see what caused the pullback, or what caused the buy of this entire trend in the internal structure of the weekly time frame. I'm going to see what caused the pullback. So that is the reason why I'm going to draw my distance back to this area. So now, as you can see at this area, we are having something we call breaker block. So the market is reacting from this breaker block at this area, from this breaker block. And don't forget that this breaker block is very, very valid. We have something we call inducements and our point of interest. So the market is reacting from that breaker block, So now let's go and analyze the internal structure. So the internal structure now is telling us that Euro USD is in the uptrend, right? It's an uptrend. So it's telling us that Euro USD is an uptrend. Don't forget that our directional bias from the weekly time frame is downtrend. It's a let me say it's downtrend. Yeah, it's downtrend. It's bearish. But our internal structure, I'm talking about these ones. Our internal structure that is telling us that okay, oh, we can still have a buy before Euro USD is going to do anything, as I say, right? Okay. Now let's move to daily time frame. This is daily time frame. Now I'm going to trace back my weekly time frame point of interest and mark it out properly on the daily time frame. So this is my weekly time frame point of interest. I can also see something here. I can see that there is an order block. There is a daily order block at this area. This is it, guys. This is it. We have an order block at that area. Daily order block. Though we just have few pips for the market to get there, for the market to reach there. So here is going to be my inducement. Yeah. So now we just have a few pips for EURUSD to get our weekly time frame point of interest. To get our weekly time frame point of interest. I'm coming, guys. So now let's analyze our daily time frame internal structure. Our daily time frame internal structure, which says bullish. Yeah. So this is our daily time frame internal structure. Let me start from here. Here we have a break of structure. We have a break of structure at that area. Internal break of structure. We have our break of structure. From this area, the market is reacting to what we call breaker block. We have a breaker block at that area or order block. So the market is reacting to that point of interest at that area. And here also we have a break of structure, internal break of structure, IBOS. So and the market is reacting to this point of interest at this area. So here is our break of structure. Yes, our break of structure. Let me mark out this bad boy. Here is our break of structure, and also here we have a break of structure at that area, and this is our inducement at the top. Okay, now what can we see in this area? What can we see? What I'm seeing now is that this market is reacting to point of interest is reacting to this order block at the daily order block. The market is reacting to the daily order block at this area. So this daily order block is the one that is causing these movements. Because all this one you are seeing here, for me I call it inducement. This one is our inducement, as you can see. So the internal structure, in the internal daily structure of this market, which is bullish, is very, very valid. It's still valid. So now, how can we have opportunity? How can we have trade? Okay, now we're going to analyze these points. We're going to analyze this area again. I mean this area, because the market have tapped the daily bullish order block, and we are expecting the market to get to this area, to move from this area, boom, 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 to come to this area, to tap the daily, to tap the weekly inducements, the weekly inducement, to tap the weekly inducement before doing anything, because we have not yet get to our point of interest, our weekly point of interest. We still have something we call inducement. So at that area, we still have something we call inducement. Now, what are we going to do? We are expecting buy. We are expecting buy on EURUSD. Before EURUSD is going to do anything. Before EURUSD is going to do something else, we are expecting buy. Okay. Now let's analyze the internal structure. Here we have change of character, market structure shifts at that area. Let me say change of character. We have change of character. Don't forget that this is the block that pushed the market to the upside. That's the candlestick that pushed this market to the upside. So I'm going to use my rectangular to mark it out. So you can still expect the market to come back to this block. So this block is still valid. For me, I'm still expecting the market to come back to this block. For market to come back to this block, we're going to do our proper analysis. And here is going to be our inducement. It's going to be our inducement or liquidity area. For now, don't let me call it inducement. I'm going to call it liquidity area. Liquidity area. Don't you call it liquidity area? So I'm going to use my Fibonacci tool. Yeah. So I'm still expecting EURUSD to come back to 0.78 Fibonacci points. So to my 0.78 Fibonacci points. So I'm still expecting EURUSD to come back to this area of interest, of daily time frame interest. So that's where I'm expecting EURUSD to come back to. But for now, we are going to do proper analysis. So let's move to our 4-hour time frame. What can we see on 4-hour time frame? So for me, I'm going to mark out this reaction. I'm going to mark out this area as my what? As my protected eye, because I'm expecting EURUSD to come back to this daily point of interest before moving back to the upside. Daily point of interest before moving back to the upside. Don't forget that I say once you have an expansion, once you have a breakout, there must be a retracement. So expansion, retracement. Now, what are we expecting? I'm expecting a retracement on EURUSD. So I still want EURUSD to give us a little sell, a small sell before buying. EURUSD have to set to this daily point of interest before buying. Don't forget that this area we have something we call the block that push the market to the upside. Is at this area. So I'm expecting EURUSD to come back to that area for us to have a good buy. For the weekly time frame, point of interest is going to do any other thing. So what is this bad boy reacting to? At that area? So now I come back to this area and mark it out properly. Here we have something we call FOB. For me, I call it FOB. It's one of the strategy I'm using. A fade order block, a fade point of interest. That's FOB, a fade order block or a fade point of interest. So that's what I call it. FOB. FOB is at this area. That's where the market is reacting to. Now. That's where the market is reacting to now. So we have a fade order block. Okay. For me, let me mark it out properly. So I'm going to mark it from this body. I'm going to mark it from that body. So sorry guys. Some yeah. As you can see, as the market tap the fade order block. I know you're going to ask me that where is the fade order block? This is the fade order block. This blue candlestick is the fade order block, because market sweep liquidity. Market swept the order block liquidity at this area. This is the sweep. This one is the sweep. This candlestick is the one that sweep this this other block is the one that sweeps that sweep this this failed order block. So this failed order block is still valid. It's still valid though. For me, I call it failed order block. Once there is a failed order block, market will surely come back to that failed order block to mitigate it again. To mitigate it again because that failed order block is not yet used. So now, for me now, I'm going to use it. I'm going to use it at this point. I'm going to use it because it's for me. It's still valid. That area is still valid for me. This is 4 hour time frame. Don't forget that this is 4 hour time frame. 4 hour time frame. The market tap there. FOB. The market tap there. Failed order block at that area. Also here, if you check this area also, this candlestick, this doji candlestick, this doji candlestick is a failed order block. The same thing that thing that is happening, that the thing that happened at the right hand side or at the left hand side of the market is one that is happening right now. So we also have the failed order block at this area, at this point. We also have the failed order block. You see, I mark it out. This is the failed order block again. The failed order block. As you can see, the market broke it. The market broke the failed order block and mitigate the previous failed order block to sell. Now, here we have a change of character again. A change of character to, let me say, internal change of character. IMS. Internal structure shift. Internal market structure shift. So I'm expecting a sell from this area, and we have something we call the order block. The order block here. As you can see now, the market is getting to our weekly in our 4 hour order block. So for me now, I'm not going to take this trade until I see a confirmation, until confirmation is being done on the lower time frame. So now I'm going to use my 1 hour failed order block for this entry. I'm going to use my 1 hour failed order block for this entry. The 1 hour failed order block. So the 1 hour failed order block is more valid than the 4 hour failed order block. So this 4 hour failed order block, though we have 4 hour my 4 hour full engulfing order block, which can push the market at this area. But for me, I'm going to use the 1 hour one because the 1 hour is having what I call FVG. Don't forget, any valid point of interest for me, that's my rule. That's the first rule for me. Any valid point of interest for me must have something I called FVG. I must see my FVG, which is called the inducement. So I'm going to be using my 1 hour failed order block for this entry. So my entry is going to be here. And my stop loss is going to be at this area. Let me say 15 pips. Or 16 pips stop loss. Our liquidity area. So this is 1:10 trade. 1:10. So for me now, I'm still expecting EURUSD to sell from that area. Though, yeah, for me, I'm expecting EURUSD to sell. But though I'm seeing some things that EURUSD is reacting to this breaker block. For me, I'm not going to take this trade because I'm expecting EURUSD to say start selling to this daily point of interest, to this daily order block. So by then we can say, okay, now I want to be moving the market up. back to the upside, back to the upside. For now, I'm expecting sell on Euro USD. So guys, that is it for Euro USD. That is it for Euro USD. So that is our analysis for Euro USD. You also go back and do your own analysis. Do a proper analysis on your own pair. This is not a financial advice. Yeah, this is my own knowledge. This is how I used to analyze my trade. This I used to analyze my trade, and that is my strategy. That is the strategy I'm using. So that is the strategy I'm using for my own analysis. So that is it, guys. Once again, my name is SP Trade, and thanks for watching. Thanks for watching my video. Don't forget to like, subscribe, and comment. Comment the next pair for me to analyze for you guys. The next pair on my next video, the pair for me to analyze for you guys. Just comment. Okay, maybe I should analyze GBP USD or AUD USD or GBP JPY or any JPY pairs. Just comment. Just comment. And if there is any area I made a mistake, comment also. Comment. Just make sure you correct me, because here also I'm here to learn. I'm here to learn. Nobody's perfect. Nobody's perfect on this thing. On this thing, nobody is perfect. Don't just say someone is perfect. Nobody is perfect. We are all try our best. We are all try our best. So that is it, guys. Thanks for watching. Thanks for watching. Bye for now. Bye for now. And don't forget to subscribe and like the video. Comment. God bless.